Good morning, everybody. Getting more of the same here. I was kind of hoping the market would open lower, come down to that support where we'd have a better probability of something meaningful happening, either up or down. But being closer to the support down here, reaching would be a better setup for us to get something. I mean, could have been down and could have retraced right back up again. Anyway, we see it's backed off, but it was up, right? Up near the high here, actually just above it, which could have opened up the door to, rallying up there. And that's certainly not out of the realm of possibilities. 355 and a half, still a pretty good gap up into a red bar. We'll see where it is in the next half hour, of course, but it's a pretty good gap up. Maybe a red bar ignored. We shall see. We've got this retest pattern on the 60. So kind of like a continuation of yesterday's retest and reversal. And this little congestion area right there would be that we need to get above to get something meaningful going, which is 357 and a half or so. And that could open up the door to a move up here. We shall see. It's erratic kind of price action. Little chop going on here, certainly could move to the downside. But, ignore these ticks. I'm sure they're erroneous, where, this is forming a little bottoming type of a pattern. We'll see after the gap up. So a little bit of a bullish pattern going on here. We'll take a look at the other markets and see where they're at. 0 data expiration SPX. I would say look above here. The odds of getting above there, thinking are pretty slim, but again, that's our line in the sand. If it gets up there, it clears that. There's nothing above it. And down below, I don't think we want to go below that bar. Matter of fact, I know we don't want to go below there. And again, if we can get below 358, that is 11.6 SPX. 11.6, 334.80. So let's say 34.80 or below. Right? There's going to be buyers at 34.80 should this actually fail. But you do have, let's just move this here, forget that it's red. You do have two defense lines, meaning 35.20 area, since it's going to be gapping up into this area here, and then below here. So with two lines of defense, should be a good put spread trade. That's because she wants 3.4 trillion because she wants to send you some of it. Yeah, right. Criminals. They can't decide on spending a few $100 million. Now they want to spend trillions. This country, you guys have your own whatever. I think this is the beginning of look at the history. Every superpower eventually goes under, and this is probably the start of it for America. Anyway, at least above 3,600 or better. We'll see where the premium is, and down below 34.80. Qs. It's the same kind of erratic price action here. Here's our significant support down around 280, 292. Didn't quite get there. Showing a little relative weakness to the S&Ps, but just trading inside of this range. Nothing much to take away from it. A gap up and it's coming back. A little bit of a void below, support not too far away. I think we're in for more choppy stuff going on here, folks. You pick your intraday points and try and grab a few out of it. Looking at here, the 15 little support area there. And, kind of can open up the door to the gap fill, and 292 above that opens up the door to what could be a sizable move. So, that's what we have to look to see. The weekly big wide bar, right, which of course doesn't show the gaps. You got that giant gap, which, if it gets below 280, look out below. That red bar, that big green bar, I should say, is going to just fall apart. So far, we're trading in the upper part of it. You guys know the routine of what we do here. When we get a wide range bar, we look at around the 50% level as a guide as to, hey, whatever the jiggles are that's going on in a smaller time frame, as long as the open and closes are staying in the upper third, which it is, and at least the upper half, we're okay. Tails breaking below it don't matter that much. As long as we get, those, especially the close, staying in the upper part, that's okay. Now, it isn't a wide range bar breaking out. So that doesn't necessarily infer as if it was making new all-time highs, a continuation. We just got a trading range here. So until proven otherwise, it's just sideways chop. We're waiting to see. Waiting to see. Backing off a little bit here. Nothing all that meaningful. Well, let's look at the Dow. All right. So yesterday broke down here, under here, opening the door to the void. 36.05 could be okay, McGraw. Closer we get to it. So what we'll do at the open is see how much, well, it's opening higher, how much it can continue to move up. And then let's just say it moves up to this area here, 3580 or so, give or take 3600, and gets a nasty break to the downside. Yeah, we'll give up some premium, but we'll be safer. Overall, this is just a consolidation and a move up. So there's nothing much bearish about this. So yeah, it broke out and came in again, but it's holding support, after this run up. So until proven otherwise, this is a consolidation after a bullish move. We have to respect it. So call spread being what it is, and how it can cut hard in the other direction. Let's see what happens, after at least 15 minutes of the open, to see if it gets slammed back down again. Let's take a peek at the futures. Well, not necessarily bullish, Ludwig. Right now it's neutral. So look, my opinion is based on the chart. The chart is what it is. I'd like to see it, based on what I believe. I'm listening to the news, granted, but the evidence that I see points to a lot of criminal activity going on here. And that doesn't make me feel good about America and what's going on. So my preference would be for this market to crash, to teach some people a lesson about what's going on. Personal opinions aside, which don't mean a damn thing to the market, I have to look at what is. And that move up is bullish. It cleared that resistance like the proverbial hot knife through butter. All right, so it's going sideways. I didn't say it was objective, Alex. I said it was my opinion. My opinion on the market is based on the chart. So that move up is bullish. So far, this sideways consolidation is expected, meaning a bullish move should create support. That's what I teach. That's what I trade. And that so far is what's happening until proving otherwise. I've mentioned several times during the week, if you look at this or visualize it on a closing basis, nothing's happening here other than going sideways after a run up. And when it dips, it comes back up. So there are buyers on the dip. Not enough buyers yet to really drive it higher. Maybe it will. We don't know. All right. So as something goes sideways, as something goes sideways, it's creating support, which, if it fails, will become resistance and will produce a shock pattern. Right? So what's happening right now is buyers are stepping up on the dip. Why? Because they're anticipating it's going to go higher based on the strength of this move. Now, all of those buyers, if we get a big, nasty red bar closing below that, you know what they're going to do. And that's going to open up the door to a pullback. Next question, based on MTS, is pullback to where? Well, there's not much of anything below it. So that right now, it's neutral to bullish. We're waiting to see if the bullish case can unfold and resume and go higher. And probably, if that's going to happen, maybe it's next week. And we all know that the next news story that comes out over the wire or tweets could drive this market one way or the other. So, it's a tenuous situation right now. We're trading the charts, but we don't have any price pattern here that says, let's jump on board this. Now, if today was gapping lower, let's say it was a nasty gap down, and we had a bar like this at the end of the day, then I'd be saying, hey, that is one hell of a strong move. And while I would like to see maybe a 1, 2, 3 or a 1, 2, 3, 4, I would then have to say this is going higher. You want to look NQs on the 60, which could not do it yesterday. I don't know what you see, Alex, but it looks like a bit of a mess to me. Nasty move down. It came back up and it's going sideways. And you can see where I have my support and resistance. If you can get above 12,000, I'll be getting long, looking for it to go higher. If it goes below 11,800, you got the downside, probably to here. And then we'll see if it can hold anything. So far it's going sideways at the top of the range. So far, it's got to clear this area. There's no point in any longs to go here to here unless you're pretty fast on the draw and the exit and waiting to see what happens when it gets up here. Clearly, it's been rejected a couple of times. It's being bought down here. So it's in the middle of nowhere. Stay on the side. All right, let's continue here. I've used the term, Dan has used the term yesterday, trading in this market is, if you're swing trading, it's got to be like walking on eggshells because we have no clear patterns here. Intraday, no problem. Right? We see patterns, we buy them, we short them, we can adjust for them in the moment. We already have stops, so you should have stop loss orders already in the market. If you're trading in any market intraday and you're not using software that allows you to have your stops and targets in there already, as soon as you press that button, your stop loss order should automatically be in the market. So if some news comes out, you'll experience some slippage, but you will get out. And do not use limit orders because you could just be left. It's better to experience a little slippage than not get filled at all and watch something just run over you. So if you don't have those kind of tools, again, proverbial knife in a gunfight. If you're an intraday trader, you should be using software that allows you to automate your stop losses and targets as soon as you press the button. All right, YM. Same story here. So far, bullish consolidation, chopping after a run up, sideways here on the 60. We're in the middle of the range. Russell, bullish, broke out. Actually cleared the resistance, didn't close above it. You got a bullish 180 reversal there. we're waiting. Prove it to me. That's the bottom line. Prove it to me. Give me a big red bar ignored. Give me a gap down that gets bought. Give me a big bottoming tail bar. Some type of a correction bar that suggests to me that buyers stepped up aggressively and prices are going to go higher. Bonds coming off the low a little bit here, bottoming tail bar, right? For the longest time, over the few months, we were expecting it to come down here. It reached its destination, and now it's trying to build up some support here within this range. So far, the closes are above there. You can see the daily is still in a downtrend. Slop. Oil down here a little bit, but broke out. Right? We covered that earlier in the week. It's pulling back. Buyers should show up in the $40 area, I suspect, give or take. You can see the converging moving averages, the overlapping opens and closes here, $40. Maybe a little bit underneath that. Should be buyers in this area here, expecting it to go higher. Gold, right? Coming off of the low here. This is a great example of why we teach a wide range bar as a momentum move in a lower time frame. You can see it right there. There's just nothing to stop this from going up. Doesn't mean it's going back up there, but that's power. But it's the weakest link, meaning there's nothing to stop it. So the power of this move theoretically should bring in sellers. 1900, 50 MA, subjective resistance, meaning across that bar, somewhere in here, and then they need to create resistance. That's the idea or concept of creating resistance. Whereas, okay, the theory is, well, it could come all the way up here, nothing to stop it. But whether it's 1900 or whatever, what you look for it to do is form an M type of a top with a topping tail bar that you can short and then see if it resumes to go back down. So, it's holding this low. And again, overall, while this is neutral and it's been damaged, unless it breaks below here, this could recover. So it's probably best, it's best, unless you're an intraday trader looking to trade this, stand aside. It looked like it was going to rocket higher, here. That didn't happen. Markets can do things that totally may not make sense in the moment, but we say it is what it is. Silver, the same story, breaking higher here. So if you're an intraday trader, buying dips, looking for it to go up into this void totally makes sense. And lastly, take a look at transports. Same story as what we look everywhere. A lot of choppy price action. We'll see how it all unfolds today. Happy Friday, folks. All yours, Dan.
You forgot to say happy zero DTE Friday.
All right. Happy zero DTE trading.
Yeah. I've sent a couple of ideas that I'm looking at already. And we love, the typical spiders and the other ETFs also, but I love earning stocks because they're going to have bigger juice. So I sent the telegram. Cisco's a nice little, gap breakout here. We'll see what we can get on a pullback. Dunking gap might be too big, but maybe we can do one for next week. SPY, of course, gapping over the high, but to resistance. So I'd prefer a pullback into the first reversal period for that. Here's one, Big C. Big C is gapping down, bearish gap breakdown. Now, you know what also, how we talk about patterns and wanting a potent reversal and wanting a something. This is a perfect example of, it was a potential W bottom, right? Potential W bottom with new low plus. But with 100% certainty, had you have asked me yesterday, hey, Dan, can I buy this as a double bottom? It took out a prior bar's low. You all in the green room know my answer. I would say absolutely not, because I don't have a potent reversal. See that? I want something more. So I'd want it to break down, bottoming tail. I'd want a gap reversal. I want something. This is not a potent turn. And then you know, it's getting its head chopped off here a little bit pre-market. So I want to look at that for a call spread. Yeah, solo yesterday was the day to enter that. That looked really good yesterday. And it gave you a beautiful entry over lunch here. And even the afternoon gave you two beautiful entries on the 15-minute chart. Let's look at other gappers here. Fitch, we're not in, we're in F slide. Fitch gapping up too big. I don't know if this was earnings or not, but this is actually a 0 DTE call spread candidate. If it comes up here and maybe gives us an M top using the pre-market data, but you know, it's a big old gap. It's gapping over 12% or whatever, far from the 20. So let's keep an eye on that. For a call spread, 0 DTE. Cody for Matthew. It's 450. It's far from the 20. I like the weekly, but I don't like the entry on the daily. It's too far from the 20. This thing's getting whacked to the downside, SFT, but its gap's too big and no pattern. Revlon, I was just reading about in the journal. The last couple of days, they said they've been securing their finances to avoid bankruptcy. And then, you know, I don't know what the news is, but it kind of looks like sell the news, right? Something runs from $4 to 14. And now they've secured, now the deal's final, as opposed to the talk leading into it. So this is a fantastic example of buy the rumor, sell the news. When we were looking at yesterday, but we were waiting for the turn, TURN, and you know, the momentum's slowing. Notice the distance between lows are getting tighter, and now with this pre-market action, we're over we're making a higher high. Let's keep an eye on this for selling maybe the $80 put spread for next week. Myrna, we actually we sold the $55 naked puts yesterday for $1. Look at that, down way the heck down here. Not sure what your question is now, Rick. You know, it's just going sideways, maybe day trade 30-minute high, but nothing to do for a new swing. YouTube's asking about shorting NEO. No, I would not do that. Why? Because there's no setup is why. There's no setup. It's a strong uptrend daily, weekly, monthly. It's an uptrend on the weekly. It's a buy setup pre-market. So it might set up into a day trade, but right now you're fighting strength. You're fighting strength. Maybe if you get a double top, I don't know. It's just, I'd rather short weakness. And this had a red bar ignored, so it's not that extended yet. Well, that's not true. When I like to fade these, I like parabolic moves and then cracking on the hourly chart. But the fact that it negated the red bar is kind of, what's the movie? I don't know if it's Superman or whatever, where he got, you know, he got his juice. He got some renewed strength. All right, Big C we talked about for Andres. He's also asking about Codex. Yeah, there you go, Papa. Yeah, he got exactly that red bar ignored. He had a can of spinach. Andres is asking about Codex. Not sure what your question is, Andres, because it is a breakdown failure. It's in a strong uptrend on the 15-minute chart. So if you're trading the 15, fine, just manage off that. It is a downside shakeout with a price void, but it's up 3 bars. First swing, I prefer it to go sideways more. Lauren's asking about SWN long if we break above yesterday's high. It's just too far from the 20 without, I think the risk to reward is not great because your target's only 310, 305, and you would need a stop under yesterday's low. So I don't like the risk to reward there. Let's continue. CBAT gapping up 523, but there's no pattern. Arroyo here. I like this. I actually gave it pre-market as a core trade. Typically we say buy over the high, but I just said let's just buy it pre-market. Same stop, but now it's weakening a little bit. So if you're not in this, I would wait until it goes over 360. Because that's kind of this green bar got negated. So over 360 would be your entry. But I like the daily igniting on volume. Look, I got a W bottom here on maker support, and that's the place to enter this thing. These 2 hotels, big gaps the other day on the comeback story with the vaccine. Hilton and Marriott, I want to keep an eye on for put spreads maybe. They're making the turn here into the gap. LI was on our list yesterday, but it was gap into resistance, so I didn't chase it. And wow. Now see, I did this one. I know this is a very, very powerful bar, but look at the size of the gap. I'd rather have this as a day trade short when it sets up intraday. It's not now, but if it went up and gave you a bearish 5-minute chart, just because it's more extended short term is all. FSR, there's a gap breakout after 100% retracement. That's right at this weekly high.